Good morning, traders, and welcome to BCI's morning market analysis. Let's have a look at today's markets. We'll start with the US dollar. The US dollar index traded within a tight range of 97.25 and 98.15 last week, but it still remains under pressure. August CPI showed 8.4% monthly gain, slightly above expectation, while the annual rate held steady at 2.9%. At the same time, jobless claims climbed to their highest level since 2021, underscoring the labor market weakness. Markets are now pricing in a 93% probability of a 25 basis point Fed cut on the 17th of September, with growing odds of a larger move. Policy headlines also played a role. The US and Japan issued a joint statement stressing that exchange rates should remain market driven, while the ECB kept rates unchanged at 2%. Technically, the index struggled to hold above the 98 mark, reversing lower after testing resistance near the 34-day moving average and the 50% Fibonacci retracement level. Support is forming around 97.43, with further levels at 97.11 and 97 still in focus. Next up, let's have a look at WTI crude oil, which edged up about 1% last week, recovering some losses from the prior week. Prices initially spiked after reports of an Israeli strike on Hamas leadership in Qatar, and tensions escalated further when Poland intercepted drones during Russia's attack on Ukraine, which was the first of such NATO involvement. Those gains faded as supply concerns weighed. Additionally, uncertainty came from reports that US President Trump urged the EU to impose 100% tariffs on imports from Russian crude buyers. Technically, WTI briefly broke above its 20-day moving average, reaching 63.78, but pulled back below it. Resistance is seen at 63.78 and the psychological level of $64, with strong barriers at 65.61 and 66.78. On the downside, support is holding near 60.78 and the $60 psychological level. Next, let's have a look at gold. Gold remained firm last week as economic signals continued to send mixed messages. Inflation showed resilience while labor market data weakened. Together, this has reinforced expectations for a Fed rate cut, which has supported the metal despite short-term volatility. A weaker dollar has also provided some tailwind. Technically, gold is showing strength but sits in overbought territory with the RSI above 77. Support is seen near $3,600 and $35.78, while further downside could open the doors towards $35.38. On the upside, buyers are eyeing the record high of $36.75 with the $3,700 psychological level as the next barrier. Lastly, let's have a look at the Australian dollar, which climbed as high as 66.70 against the US dollar last week, which is its strongest level since November 2024, before easing slightly to 66.50. Softer US jobs data and Fed cut expectations weighed on the greenback, while strong domestic data limited the case for further RBA easing. Inflation expectations in Australia rose to 4.7% in September, adding to concerns about price pressures. On the charts, the Australian dollar remains in a bullish trend above the 66-cent support, with momentum reflected by an RSI reading above 66. Resistance lies at 66.87 and the 67-cent level, with deeper support around 65.61. Well, that's all for today's morning market analysis. With Fed policy firmly in focus and inflation dynamics still driving sentiment, markets are bracing for an important week ahead. As always, stay safe, manage your risk, and happy trading.